Hello traders, I'm interrupting the usual style of videos to give some thoughts on the markets. This week is full of red folder data and we have 3 central bank decisions, 2 inflation reports, well 3 if we're counting in what's going on in Europe, and NFP to top it off. And I'm going to give my thoughts on the Federal Reserve in a moment, but the first currency I want to talk about is the Australian dollar. Okay, now the Australian dollar has been weak of late, and this has largely been due to the risk-off sentiment in the market and investors favouring yen and Swiss over the likes of the Australian dollar and the New Zealand dollar. Now, this has been compounded by the recent CPI report, which showed core CPI in particular falling to 0.8%, with headline CPI falling below that 4% to 3.8%. Now, this level of inflation is still relatively high, but it would reduce the chances of a rate hike by the RBA, okay, which is something that is around 70% priced in at the moment. Now, moving on to the Bank of Japan, it's fair to say the carry trade could be considered to be over for now, as the Japanese central bank rose interest rates a little bit unexpectedly to 0.25%. And this was down to the underlying inflation pressure being felt and could be down to the rise in wages that we have seen in the private sector. This has caused the yen to strengthen and dollar yen in particular to trade below the key level of 152. Now, will this sentiment continue? We'll have to wait and see, but I imagine our attention will have to turn to the FOMC Fed funds rate decision. Now, the Federal Reserve is expected to leave rates unchanged in this meeting, so the outcome of that will be a little bit of a non-event, I feel. However, the press conference after will be the market mover. Okay, now if the Federal Reserve Chairman Powell leans into the chances of a cut, which currently is being priced in at 100% on the CME Fed Watch tool, then the US dollar could weaken further, stocks could rally along with gold. If though, and a very small if, is that the chairman will disappoint markets as the inflation rate remains above the target rate at 3%. Now remember, the sweet spot for central banks is around about that 2% inflation rate. I think the labour market, which we've been talking about for a while, is the concern here for the Fed, who may cut rates in September that leave rates higher for longer. So keep an eye on your US dollar this afternoon. It's going to be a very interesting watch. If the Federal Reserve Chairman leans into cuts into September, we could see dollar weakness, stocks rally, and gold rally. Thanks for watching this video update. I hope you enjoyed it. If you did, give it a thumbs up. Subscribe to the YouTube if you're new, and I'll speak to you in the next video.